One of the companies that we've been really admiring a lot, and a company that's done really well, the darling of 2022 in the tech industry with a high yield, has been IBM. While other companies got crushed in late 21 and 22, IBM actually was the best held up stock in the market across the big tech companies. But how'd they do this quarter?
Yeah, so you nailed it. I mean, IBM is durable in terms of demand. You just can't turn IBM off unless you want your bank to stop running, if you want your retail store to stop running, and if you want to, stop your hybrid multi-cloud rollout with Red Hat. So IBM had a good showing. I mean, if I look at this environment out there where business has been going down for a lot of digital transformation projects, the company did well. I mean, it beat on EPS. It was slightly off on revenue, but what it did do is it narrowed the guardrails of its guide. And to me, that exudes more confidence in the company. It really does blow my mind, though, how much kind of the makeup of the IBM business. I mean, listen, the IBM Z series is iconic. It's infrastructure. It drives a heck of a lot of profitable revenue dollars. But what a lot of people don't understand is it pulls through a lot of services and software as well, in addition to some consulting. And over 50% of IBM's revenue this quarter was recurring, and over 75% of revenue was software and consulting. Consulting was off, and on the call, CEO Arvind Krishna talked about the softness in terms of that sector, primarily related to digital transformation. And what people shouldn't confuse is digital transformation with upgrading your core infrastructure, kind of your bedrock, right? So when it comes to infrastructure, when it comes to software related to things like containers in the cloud, you ERP consolidation and stuff like that is doing the basics. I almost don't consider that digital transformation, which is, hey, let's do something radically different. So 54% growth at 54% gross margin, I think is really good. I'm not concerned with infrastructure being flat because infrastructure number is all based on Z series, and Z series had a 2-year surge, and that surge is winding down, and that's just natural. Now, the fun part is that typically the Z surge is followed by a software and services surge, which I'm expecting to see. So overall, IBM did well. I did like Arvind hinting some things on the call related to AI, and I'm hoping that the company at this upcoming Think down in Orlando that both you and I are going to be coming to will lay that out. IBM is already very strong on the data side, and you have to have a strong data platform to have a good AI platform. IBM has integrated machine learning acceleration right in its Z16, and they have a ton of things that they're going to be. I'm hoping that they're going to be bringing out at Think. We already saw their AI supercomputer for foundational models and generative AI. I'm hopeful we're going to see a lot more because, Daniel and I really brought this out in my AWS piece last week about what they did with generative AI. There's this huge difference between what the folks in the consumer world are doing and then what the folks in B2B world are doing. The roles are different, the risks are higher, but the payoffs, as we've seen in B2B generative AI, can just be huge. But it does require that you take a little bit of a slower roll than, throwing out Bard and Bing Chat, right, as an experiment. I mean, literally, we both use Bard. It says experiment in the upper left-hand corner. You do not want to subject your P&L, your revenue stream, your customer interactions to an experiment.
Well, I don't know. Samsung did it. They're a pretty big company. I think the allure of some of the AI technologies is pretty great. Now, I mean, I'm getting sucked into the vortex, but I think it's getting sucked in intelligently. And I think this is where IBM has a really strong position. You go back to the Watson machine winning Jeopardy. That was basically your early iterations of generative.
That's right.
There. This is not new. And IBM's been at the forefront of this. And I'm actually Future's working on a paper right now. We're going to look a little bit at the foundational models and some of the things that IBM's doing and how it's going to basically build and position the company really well, especially at the enterprise level. Because enterprises are going to have to, you have to talk about this a lot, combining that proprietary data, both real-time, systems of record, ERP, all the different data that they have with that sort of open sort of GPT experience to create these fast-moving generative AI capabilities. But let's just, for a minute, reflect on the earnings here. I had the chance to talk to CFO James Kavanaugh on the evening of the earnings. It's great to get a kind of another perspective. And, he said the same thing we've been saying, Pat, that the strategy and investment thesis is playing out across the business. Now, look, the growth was not overly impressive. In fact, revenue missed by a bit from where it was expected, but earnings were very strong. You can tell the operational decisions, the streamlining of the business. They did make some overhead cuts. And I think that's important that they're continuing to deliver in this current macro environment. You saw some strong numbers from systems, especially with Z. I think you mentioned that, Pat, but there were parts of the business that performed really well. And then there were parts of the business that didn't perform as well. A couple of standout things to me was margin expansion, both on the top and bottom. So the margin was up on the gross side by almost 80 basis points, and the operating margin's up by 130. So they were above the guide there. They're also continuing to return to shareholders, strong dividend on the stock. And I think there's been a bit of a flight to safety among a lot of investors that want to get exposure to AI. They want to get exposure to cloud, but they don't necessarily want the high volatility of some of the more typically growth-oriented names. Now, Red Hat's overall growth was a little bit concerning to me. I think it came in at 8%, something like that. And, there was some pressure from the strengthening of the dollar again. And so you saw something between about 3 and 5 points against each of their different results. So it made things like flat on revenue, but it was really 4 to 5 at constant currency. That's going to continue to be an issue. Global companies, a lot of headwinds with currency, a lot of uncertainty with the economy and a looming recession. But the good news, Pat, and I don't know, I think you said this, but, sorry, I was, tweeting about the podcast. So, but 40% on OpenShift, 40% growth on OpenShift, which is the real product indicator of the adoption of hybrid cloud.
Yeah.
Huge number. And now it's over $1 billion run rate business. All ARR. And the company's also announced that close to 50% of its business falls into kind of that ARR more predictable group. And that's really important too for a company like IBM, getting away from kind of those big one-off sales and getting to a point where their software and other subscription models are really high. Now, I'll make two more sort of points to kind of keep an eye on. One is the automation, and the growth was a little low for me. I'd like to see that growing faster. And the second was security also. Actually saw the number go down. And when I talked to James Kavanaugh, I said to him, I said, that is an area that I'd love to see IBM growing. With RSA coming up, we did some really exciting interviews. IBM's security portfolio is really compelling, Pat. But for whatever reason, in a market where security may in fact be one of the most exciting opportunities other than AI right now, I'd like to see IBM's numbers growing in security. So overall, though, tough macro, good result, strong company, and their thesis is playing out. I think that's the thing to watch. Now, what happens next? Well, you'll have to wait and come back to us in a quarter, but we'll let you know.